A new road project takes shape in the capital Kampala. The paved road will rid locals of dusty trucks, but the cost is becoming unsustainable, according to the Auditor General. There is worry that Uganda does not have the capacity to generate adequate revenue to pay back the loans now amounting to over $11 billion.
Our service delivery, the quality will have to go down. And then also the other issue could be that much of the private sector will have to be crowded out. And yet we know that private sector indeed brings in investment, employment, and growth.
Uganda owes China more than $400 million and close to $800 million in loans to the World Bank. A big chunk of this money is going towards the development of hydropower dams, roads, and the oil and gas sector. Uganda plans to borrow more money for the oil pipeline, refinery, and the standard gauge railway.
Uganda has continuously borrowed. Our biggest challenge is the trend. It is on an increasing basis.
But the government insists the country is not in debt distress and that it is way below the International Monetary Fund's risky threshold of 50%.
We therefore compare very favorably with the peer countries because most of our debt has been contracted on concessional terms. Please take care of these concession terms. Longer period of repayment, very small interest rate. By the time the loan becomes due for servicing, we're already reaping.
But the Auditor General's report shows that about 50% of the loans may expire by 2020. And this means that increasingly, a bigger portion of the government's tax revenue collection will go to debt repayment. However, government says the economy is expanding fast enough to settle its dues.
So when it is expanding, it means more production. More production means more revenue. It means more exports. More exports means more dollars coming in here. And the time when it comes for me to pay in dollars, I have the dollars.
Even with the growing fears, government will not back down on borrowing, but plans to do so cautiously and selectively, especially for infrastructure development, with intention to grow the economy and boost domestic revenue. Michael Balekesi, GTN, Kampala, Uganda.